Good morning, good afternoon, or good evening, depending where you are on the planet, to all the Trade Day team. And welcome to the Monday, the 28th of April, Bull versus Bear webinar. Steve Mighty here on the Call for Trade Day. Welcome, everyone. We'll go for our usual Monday run through in here today, where we take a slightly bigger picture look at what went on last week, what's going on, what we got coming up for the whole week, to give us an idea of the shape of the week, so we know when those volatility points are likely to happen. Obviously, though, volatility can come anytime at the moment, given we are in the Trump administration and there are a lot of unknown moving parts. So first of all, let's look back to last week. Well, stocks had a positive week in here, rebounding on tariff hopes, some hints that we would see some positivity, seeing not only the US indices up noticeably in here, S&P 4.6, NASDAQ 6.7% up last week, Dow up 2.5%. European exchanges also higher. The Pan-European Index 2.7, nearly 5% on the DAX. Nikkei up 2.8%. We did get a sell-off at the very beginning of the week when Trump suggested maybe firing Powell, and there were some concerns around the independence of the central bank, of the Federal Reserve. However, Trump walked back that back on Tuesday, and markets quickly rebounded and continued that rebound through the week. Fed speakers towards the second part of the week. Remember, we do go on the Fed blackout period from Saturday. We went on the blackout period. You can see there, the blackout period started on the 26th and runs right the way through the next meeting, which is on the 6th, 7th of May. But before that, we did have some positives in here from Hammack and Waller, indicating potential rate cuts as early as maybe June, in reaction to maybe a slowing economy due to the tariffs. And the combination of Trump walking back on the Powell, and then also these positive signals from the administration that maybe they were talking to China. China actually said they hadn't had any discussion with the US, but some apparently positive signals in here, seeing stocks going higher, and big tech leading the gains in here. We've had some positives, even though Tesla. Actually, the numbers on Tesla were not particularly great in here. There was regulatory tailwinds for self-driving cars on Friday, saw Tesla up 10%. And then we also had Alphabet, aka Google, putting in some good numbers and setting tech sector higher. Going into this week, we have 4 of those magnificent 7 stocks reporting this week. Apple, Microsoft, Amazon, and Meta. They are, I'll check the dates in a sec, but I think we're Wednesday, Thursday on those. We'll come back to those. And then also we have the US employment report coming up on Friday, and also inflation data, the US PCE data, which is the Fed's preferred inflation measure. So a super busy week. Bank of Japan interest rate decision, monetary policy statement on Thursday. Not really much for us to focus on there. But going into the week in here, so we have some US consumer confidence on Tuesday. Nothing of note today, by the way. Very quiet start to the week. But US consumer confidence on Tuesday. Then we get the US PCE and GDP data on Wednesday. And then Thursday, we get global PMI data to start off May, the first day of the month. And then we get the US employment results. So US consumer confidence Tuesday, PCE GDP data Wednesday, global manufacturing and manufacturing PMI, data just on the first of the month on Thursday, and the employment report on Friday. And then we get Wednesday, Microsoft and Meta. Both, and then Qualcomm and Caterpillar, not to be sneezed at, those two as well. Caterpillar makes up a big part of the Dow, but Microsoft and Meta out on Wednesday, and Apple and Amazon on Thursday. They're all after the bell, by the way, after the close on Wednesday and Thursday. Microsoft, Meta, and then Apple, Amazon on Thursday. So a big week for big tech. 4 of the Magnificent 7 reporting. We've already had 2 of those last week, Tesla and Google's, aka Alphabet. And then we get NVIDIA is some way off. That'll be out into May before we get, late May, I think, before we get NVIDIA. You can see all of that in our macro matters there in depth or in the macro summary here. We just talked through all of that, and you can see all of that in there. As I said, Fed on the blackout period. You can see in here no data of note, nothing of really any real interest. Oh, sorry, I forgot to mention, well, it's a Canadian federal election in here. I mean, probably not a massive impact onto the US indices, but it might have a little bit of an impact. So maybe watching out for results coming through from there going into today, but probably not a massive impact into the US markets. We've already covered the earnings side in here, so nothing really massive in here today, as you can see. Visa, Coca-Cola, AstraZeneca, all on Tuesday. Pfizer as well, actually. Honeywell Tuesday, and then Microsoft, Meta, as we said, but also Qualcomm and Caterpillar on Wednesday, and then Apple and Amazon after the bell on Thursday. So some big names this week. Moving to the headlines from the major news was going into the day on the Bloomberg Morning Briefing American here. Trump's China tariff set to unleash supply shock. So concerns that, no matter, even if we do have an unwind in here, the supply shocks from what's already happened in here potentially going to run up to Christmas, and some real concerns about higher empty shelves and higher prices going through the balance of the year. Trump floating a new income tax cut in bid to ease tariff rise. Canada goes to the polls. We've spoken about that. 4 of the big tech firms reporting earnings. We covered that in here. A boom like no other if he was elected president. Well, the action has been explosive, but in the opposite direction. Real concern still from the bond market, although bonds actually moving lower in yields more recently. Higher prices, lower in yields, which is probably still a positive. There was this meeting at the Pope's funeral in here between Trump and Zelensky. Some positives coming out from both sides in here, so we'll just have to wait and see if there's any kind of follow through on that. US stock futures slipped slightly before the barrage of earnings, but kind of pretty much just sitting there, not doing too much today. US stock futures fall to start the week with key data earnings. We covered that already. America's the toll for Trump's tariffs in here, all the same stuff we've been focused on. If you guys have got Asian markets, a little change in here really today. Nikkei's up 4/10, was up 4/10 overnight. The Hang Seng, little change. European exchanges in here actually rebounding higher in here. 0.2 up on the UK FTSE, just over 0.5% on the German DAX, and 0.75% on the French CAC. And US stock futures on the overnight slightly lower in here, 0.25% lower on the Nasdaq, similar on the S&P. FedWatch tool, very little to add to what we've been looking at. We've been covering this all of the last week in here. No chance, pretty much only less than a 5% chance we get a rate cut in May at this meeting we've got coming up. And then kind of seeing a more chance of a cut than not. Less than 40% chance we don't get a cut. So cuts sort of being priced in, possible cut for June. Certainly by July, we're kind of 50-50 between either 25 basis points or 50 basis points in here by July. And if we jump to the end of the year, we're kind of 50-50 between 3 and 4 rate cuts in here at the moment for the end of the year. Yields have actually been tracking back lower. So we haven't had that spike to higher yields, which is a real concern for the bond market back post-Liberation Day. Real distrust in and concerns about the US economy and the US, bigger picture of the US in general as a lender in here. So we had this big move to higher yields, that's lower prices, sell off in the US bonds. But we've been trickling back to lower yields. Slight move to higher yields this morning, but trickling back down towards lower yields, which should be supportive of the equities. And if we see in here, we're seeing also the bond prices going back higher, right the way across the curve now. We kind of had mix between the belly of the curve and the wings in here, but now we're kind of pretty much across the curve. It looks more bullish in here now with the recent rally that we saw on Friday. So 30 years, 10 years, 5 years and 2 years, all pointing up, indicating higher prices, lower yields, which should be supportive of stocks. Remain bullish in here on both the S&P and NASDAQ on the outlook. So we had a strong close to the week, closing not only reversing these down trend lines that come down from late February for the NASDAQ and from the beginning of March. Oh, no, just late February as well, sorry, also for the S&P. Not only reversing Australia, but also so that's when the after Liberation Day, when then Trump then put the pause on tariffs. We had that big up day in here earlier in April, that big up day after the pause was put on all the tariffs, apart from the Chinese tariffs. Well, we're back above not only the downtrend lines, but back above those peaks on both the S&P and on the NASDAQ. We cleared those peaks on Friday. So despite this little dip that we're seeing, so you can see those peaks in here. I think we've got them on the 30-minute chart in here. Did I not put the horizontal lines in? Or maybe they've come off. in here, but yeah, we're above the peaks. We are now above the peaks from here, from the post-Liberation Day rebound. So that's a positive. We've got a succession of higher highs and higher lows in here for both the Nasdaq in the year. So despite this kind of mini dips we're seeing, kind of little dips and a rebound we've seen in here today, as you can see, dip and a rebound. Consolidating the gains that we saw all through last week. So we had 4 up days in here, 4 straight up days last week, closing on the highs for the week, overcoming those peaks. There's the post when they put the pulls on, when Trump pulls above the peaks from there. So that signals a better basing pattern here. I do think there's further upside today and going into this week. Bottom looks like it's in potential upside going into May now. Playing it more from the long side, having been very negative in March through the first half of April. So upside potential going into today and this week. I'm still looking to play this one late, playing it from the long side. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Nothing to really focus on today, on the earnings or on the macro side, but just obviously keeping an eye on anything from Trump, keeping an eye on the social media, keeping your Squawk service on that we provide for you from our partners at Live Squawk. Because those headlines, we could get something on tariffs. Is it the 100 days? I know they're talking. They kind of focus it. Is today at the 100 days in the minute? I know they're focusing on for exactly the first 100 days. I think today is the 100 days today. So we might get something today, right? So something maybe on tariffs, might get something on, not sure if it's today, definitely this week, the 100 days. And obviously after this, this talk between Zelensky and Trump, seemed to turn negative on Putin, more negative on Putin, and calling out Putin, is he just tapping Trump along? That's Trump's words, not mine. So we might see something on that as well. So we could see some positives coming in on tariffs or the Ukraine-Russia situation, and those all need to be kept an eye on because they can certainly indicate or create increased volatility. So watching out for those. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, and we'll be back with you tomorrow for another Bull versus Bear webinar. Bye.